Alrighty. Euro's cracking down. Looks like Bitcoin's finally starting to run up. Microsoft looks like it's gonna hit its next high. We're still waiting for that. United Healthcare. The plan with United right now, honestly, is... Wait, give me 1 second. It just switched the chart. I'll tell you right now. Where's United at? By the way, Target's crashing, so... For those of you who bought those puts... Actually, let's check Target real quick. So remember what I told you. Every single yellow line, you buy a cheap put, just in case if it falls. Your long-term options are going to be down, but at the same time, now you're making money on the way back down while you're still holding that option that expires in a couple more months. That's really all you have to do here. So again, that's the game plan. You buy a single option for calls 200-300 days out when it's at one of these lows down here. Every time it hits a yellow line, you simply throw in around $10 to $40 of capital to play the downside. And you hold it for about 5 days, 4 days. And you'll get reactions just like you did today. And the only reason why I know that, of course, is just due to how the yellow lines reacted from before, right? Simple. So these yellow lines, we've had them for a long time. Even if I go to the day chart, as you can see, these lines are just highs and lows. That's it. That's all the yellow lines are. Just highs and lows. As you can see. But it's pretty much just bouncing on it nicely as it fell down. So I'm thinking if it runs back up again, you see how when it hit this bottom yellow line, it kind of did the same thing it's kind of doing right here. So there's a good chance you might actually hold now somewhere at this top portion right here. And we could see this blow up again. So for those of you that are worried because your option went down, as long as you bought a put, you're still on top right now. You're basically in the driver's seat, not in the passenger seat. If you just have a call and the whole entire time you're waiting, you're basically just chilling in the passenger seat, which is not really what you want to do, right? All right, now let's go to United Healthcare because we have a plan for this. I forgot the ticker. UTH, UHT, UTH. Also, I gotta tell you guys about this dream. United. Am I bugging? UNH. There you go. Okay, so United was basically at 630. Right now, you're perfectly at the midpoint. To be honest with you, the first thing I would do here is buy a call at this area down here. Doesn't matter where. Of course, you could try to get as low as possible, like 250, 260, maybe 300 flat, like how we're currently around this area. But I still would think that anywhere around this midpoint line is still a good idea. And again, the reason why I state this is because there's a lot of gaps when you fell right there on United. If you go ahead and measure the top to bottom, you're going to get this arrangement of DARP, which is what I currently have on my screen, which means if you need to go lower, you're most likely going to hit into the quarter point, which is at least 344 or 439 before you go down lower. Simple as that. So again, ladies and gentlemen, before we go lower on United, I'm thinking it's actually going to touch 344, if not 439. We're going to play puts at both of those levels. When it drops down and actually falls down to a new low, we'll go ahead and buy the next set of calls. Of course, relying on the bigger DARP, which is what I have on the screen right now. So as you can see with these two green circles, I already have it planned for when we're gonna buy when this falls out the sky. If it continues to fall, I don't think it will because of how big this company is. This is one of America's greatest healthcare stocks. They have a lot of businesses, a lot of companies, a lot of things attached to them, and they can't just disappear. They can take a big hit, of course, but their disappearance is gonna happen over time. Not something that's just gonna happen within 2 weeks, 3 weeks. Unless the whole entire board just disappears, everybody's disappearing, and nobody wants to handle the company no more. If you have something crazy like that, then of course you might get that shut down quicker. However, I don't think that a healthcare company truly will get shut down. Especially this one. Especially when they're this big, they're that powerful. I don't think that's going to happen. Because think about it. The person who owns United Healthcare, I believe he was... So yeah, he was shot in New York. That's the CEO. So his company is the company where that crazy story happened in New York where they basically shot him. So, I mean, I don't know if it was something that transpired from that. Maybe they started breaking down the company and its ethics a little bit more, and they started finding some stuff. I forgot even why the company even started to crash in the first place. Remember, I don't really look at news because news makes you emotional. They know how to use the right words. They know how to change your mentality and your perspective without you even realizing it. So what I like to do first is make the chart look all nice and great. And then we go back to the news once the chart is done. And then we see where we can kind of buy and sell with the expected news that we've gotten and we're going to get. Right? So it's just using the information that they give you. You can easily create a perfect future plan. Simple as that. So again, using all the information in terms of the charting, then we go to the news. After you do those two things, kind of mash them together, and you get your future expected trajectory pretty much. I was trying to think of how the planets are locked into certain gravitational pulls. That's basically what I was trying to make it sound like. It's like a thing that's always going to happen no matter what, if something is that size and if something is that, I don't know, that much mass, I guess. Just the spirals, right? With EH, this is the Chinese company. We'll leave it to the side for now. Again, for United Healthcare, anywhere around 300 to 250 is a great place to buy calls. If it drops below this, of course, we'll play the continuation going down. However, in many cases, just like you see over here, when it falls, the first time that is very large, the second time, it tends to do it as well and still pull the market back up here. So as long as you buy a strike price, it's not too crazy far. It's like a 320, 330, 340. I think you'll be good here. Because remember, we never traded United Healthcare before, so everything is going to be a test more so. Especially for the first trades. So we're going to go really light on it. Oh yeah, I was doing corn futures. We'll finish that later. We have all the crypto names we could look at now real quick. Let's go look at the crypto stuff. So that's Riot. Let's go look at XRP. XRP was a company we just traded right now. Or the meme coin, you could say. I told everybody on the Discord we're going to buy on top of the 200 moving average a couple days ago. So right around here. Had everybody bought. And right now I just sold out of everything. And I told everybody wait a couple days. We're going to try to see if this is going to come right back down on top of the 200. And then we're going to buy it again. We want to see if this could run to that pink circle up there. Which it kind of looks like it might be doing right now. So if it happens, it happens. We sold out earlier than expected. But that's alright. That's fine with me if we keep doing that every time. Because that just means we will never take a loss. As long as you keep selling out earlier than expected, it's impossible for you to take a loss. Because that's the funny reality of the psychology that shifts with a trader in this market. At first, they're not profitable. Then they have a certain opportunity or a certain situation where they gain some good knowledge. Now they're profiting a little bit, but you know what happens, right? Their initial want to claim profit at an early point changes. Now they want to claim profit later. Now they're getting greedy. That's the psychological switch that every trader has, and it happens to you every single time. Get to $1,000, and I promise you, if you took that account from 100 to 1,000, and that's the first time you had 1,000, there's a very good chance you're going to lose it, because the psychology is going to shift, and you're going to start being a little bit more aggressive when you shouldn't yet. You're going to start being a little bit more confident when you shouldn't yet. Of course, I want you to retain a lot of confidence, especially when you're trading. You always have to be very confident. However, you have to be very understanding as well. You know, there's a time and place to do a certain thing in terms of trading. So as long as you're following that rubric, yeah, you're going to have a real fun time. But anyways, back to psychology. If you want to be able to maintain it and allow it to grow efficiently, the best way, again, is going to be to always claim profit early. That's the only problem you should have. That's the only way you should trade. Of course, when you actually stack up that safety net and you take an account from 100 to 1,000, what are you going to do? Take out $900, start with 100 again, see if you could do it again. Once you do it again, now you got a nice old safety net, probably paid some bills, probably had some fun with the money as well. There you go. It's like a package deal. As long as you're actually taking out money as well and you're having fun with it, you're eating with it, you're paying your bills with it, then you're actually going to feel the change and feel that this is real, and you will start taking it serious. That's all this is. It's just a matter of you getting to a certain point where it's not motivation that pushes you forward. It's the fact that your life is not changing. You get so unhappy with that. I'm just waiting for that to happen, because that basically is the only thing that really pushes people. When they're just really tired of the way everything is going around them, then they'll actually make a giant change. It's not the motivation, truly. Motivation is only like a blip. It only lasts momentarily for a couple hours, couple minutes, maybe a couple weeks sometimes. But it's always momentarily just occurring, you know? But hate upon, you know what I mean, what you could have achieved. The realization that you're going to be on a hospital bed soon, regardless of your age and who you are. I mean, I don't really want to regret nothing, you know? So that regret really takes you out, and it starts to destroy your character, especially as you age. You start feeling like you wasted time, like you did this, like you did that. You're always going to cause yourself to be the greatest enemy. So as long as you're cautious of all the psychological little battles that you're going to have here, because this thing is like a war zone, you'll be just fine. Gotta have some fun with it. All right, ladies and gentlemen. So I think you held on number 3 on the reversal points. We're going to take a look at it real quick. Yeah, so you held on number 3. You're right back above number 2. What we're going to do is we're going to just wait here. We'll give it a second. Once we hit number 4, we'll buy some calls. If it falls down to number 5, we'll average down. If it falls below number 5, we'll continue to play puts. Plus, we're going to hold our other puts for a couple days, so we'll see how crazy the put side could get. If it just wants to run up into a new high, that's all good. Don't stress it. Just make sure your first trade and whatever amount of money you put into this market is something you could handle. Because if it's lost, we still got to have some extra capital so that we could trade and make it back. It's never over till it's over. Come on now. Give me 1 second, everybody. No, yeah, so for the Weibo stuff, I'm gonna be having a few more videos go out pretty much. What's today? Today is, I think, Monday, right? Is it Monday or Tuesday? Alright, so it's Monday, so yeah, by Thursday or Friday. By the 10th or the 11th. Remember, everybody, let me go ahead and put a simpler chart on the screen where it's not too much stuff. This is just the trends from last week, pretty much. Let's see if I can make this a little bit better. Oh yeah, I forgot I had to do it the same way as down here. One second. Let me see. I think like that should be good. Yeah, that's perfect. So, as we're falling out the sky right now, what I want you to realize is structure could potentially break and become a little bit more negative, a little bit more red, all the way until you hit around this area down here at 617 and 618. So that was the reason why I had you guys buy those options. Currently right now we're up 200%. So what we're going to do here is we're just going to cancel our first order and then we're going to sell out right now. So again, with just $10, we just turned it into $30. We're going to sell out right now at market price. Not play with the market, you know. Can't give it back. But that was nice right there. We sold out for almost 300% right there. Nice, everybody. That's what I'm talking about. All right, so now we're going to throw this capital right back into the calls. give me one moment. Let me go ahead and get a nice little call for you guys. Remember, this is dangerous. You're in the middle of an area where you could just fall out the sky. So when you buy a call, it's with the intention of, oh, if this flips right now, I'll be able to sell out for an extra $5, $6, $10, you know? Nothing too aggressive. Nothing too crazy. Alrighty, so I'm looking at the 620. Where's 621? Looking at the 621s and 622s. The reason why I'm looking at a 622 is because if it bounces and holds down here, when it does that on my reversal points, which is the structure you see on the outline, or in the background basically. So again, this structure where it shows you reversal point 4, reversal point 5, reversal point number 2, these are simply just breaking down market structure from the opening price. And we've been doing it for the last 2-3 years now, just using this structure right here, and it's always working out, honestly. Like for instance, when you hit number 5 here, this is a really good point to buy right now. This is really nice, like really, really nice. What I'm going to do is I'm going to sell my other puts that are 5 days out. I'm going to take this W right now because the account is now up 28%. That's $25,000. So again, we're going to sell every single one of them here. It's okay if we lose some value. It happens. We're just going to claim whatever we can. Maybe we'll sell out everything at 22, maybe 23% from 28. We'll lose a few thousand right there, but that's okay. Our intention right now is to sell out early and just to make sure we always have a gain on the board. And then towards the end of the day, we use whatever money we made in the beginning of the day, and then we throw it right back into the market for that last little second half trade of the day. So again, that was a really nice trade right there. For those of you who locked in the 622s, the 623s, your options are already up almost 100% here. Again, we got to be quick here because of the market. Then make sure I'm letting everybody know to sell this. Go, 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 go. Make sure everybody's sold out. Make sure everybody's sold out. All right, everybody's good. We all got a nice little gain right there. That was a beautiful 200% trade right there. Do you see how we knew it was going to fall to 619? So what our plan was, look, hear me out for a second. Hear me out for a second. Let's pause. Let's pause and just review what we just did right there. Let me show you how I knew, why I did it, and why I played that exact option. It was all very intentional. Okay, so this is our screen right now. Remember, take it easy. The market is always going to give you an opportunity. Sometimes it's going to be right back to the top. Sometimes it's going to be kind of slow. If the market's more bearish than normal, I would say just be patient. Don't rush it. I'm waiting for all my options to still sell out. Hopefully it sells the rest of them out down here. That would be really nice. Let's see. It sold some of them out already. We're getting pretty good prices here as long as it could just keep selling. Alrighty. Remember, for the crypto stuff, it was absolutely insane. We sold it for like 5-6%. So yeah, we were able to profit a really good amount just from that because we used the whole entire account for the crypto challenge. Remember, Moomoo has all these challenges, so if you guys want to actually sign up with Moomoo, you could just figure it out. Maybe you watch the YouTube video from one of these other YouTubers to grab their referral, or you use a family member. That's what I would do. I would at least sign up myself and then tell one cousin, because then they'll give you, I think, like $50 or $100, something like that, if you just sign up with another person's link. And I think the other person gets money as well, of course, right? We're going to stop doing it around here, by the way. Just like I told you guys last night, because it's just unnecessary. It ruins perspective and psychology. Makes people think weird sometimes. And I mean, who cares about what people think, of course. But at the same time, you always have to be cognizant of just the effects that the pros and cons, basically. If something has a certain amount of cons, no matter how good the pros are, those cons are always going to be used against. You know what I mean? So as long as it just stays completely pros and there's no cons, that's the environment that I want. It's not really balanced, of course, but not to get psychological, or I wouldn't really even say psychological, I would say philosophical. The idea of balance also means that things are unbalanced at moments, because things are never really 50-50. It's always 60-40, 70-30. Sometimes it might even go 95-5, right? Things become very unbalanced, but they always then will shift back to that midpoint most of the time, or around the midpoint. It's like averaging numbers, you know, just getting the median of whatever those numbers are. That's balance. You even see it in mathematics, you see it in science, you see it in chemical reactions with things canceling out. So, no, yeah, it's good to think that way, but at the same time, you get to a certain level and a certain point where you can actually control the balance, is what I'm trying to say. So you know there's going to be negatives, but you can actually control the negatives and how far they go. So you can always be actually 70% positive to 30% negative, or 80%, 90%. And you can even, yes, touch points where you're 100% just perfect, executing everything perfectly. Of course, it shifts. It goes from that perfect, 100% level. You get into another trade where you didn't put that much thought in, and it was a little bit overconfident. What then happens is, it's like it's right underneath your nose. You don't even notice it. It happens so quickly and so dramatically that you have to wait for it to finish occurring, and that loss to fully occur before your brain can actually understood what happened. When you have that situation unfold on you a couple times with bad trades or ideas where you were overconfident, what's going to occur is your brain's going to start naturally, basically kind of like dialing in, where your gut feeling is going to be able to tell you, all right, listen, this is a stupid idea. Let's just get out of here. Let's just get out of here and go for another trade later today or tomorrow. There's hundreds of trades that occur a day. There's no reason to rush any trade, truly. That's the reason why, from the top to bottom, we simply waited for that exact drop right there to fall to number 4, which was going to take you to 620. And what I was thinking was, since this is a moment where the market could be a little bit more bearish than it is bullish, meaning a little bit more bad and red than it is more green and positive. Why? Mostly because around what's going on with the political side of things. So it creates a flow with news in terms of when these reports come out of what they're going to do next with the government, or what's going on with war and stuff like that. I'm not going to go into the specifics, of course, not anymore, but it just has to deal with that. And when you can actually understand the flow of that news and how it correlates with the technicals, you actually allow yourself to see kind of how it matches up to a certain degree. with the speed and the levels that you're actually touching right now. So yeah, it just makes sense with what's going on. Because if money's going to get dumped into the S&P 500 over the next 10, 15, 30 years because of the bill that's being passed, potentially, what's going to occur is, of course, you're going to get an additive little bullish tilt on the market that it never had ever since the 1990s, right? So the 1990s was like your last massive tilt to the upside. It was when a lot of things were changing with banks. A lot of things were changing with politics, right? We were just finishing with the Cold War. So around that time, it was just like massive change started occurring before the 2000s. Right before the dot-com stuff and all that crazy internet stuff that came out. And then you had another run up to 2008, where it basically in 2008, it hit the same levels as 2002. Then it crashed right back down to the same lows, held at a certain similar point, just like how it did in the 2000s, or the early 2000s, because now this is 2009. And then you just pretty much started shooting up right into the sky right after 09. So in terms of the recent events, of course they pose a great, I wouldn't say problem. I would say it poses a great opportunity. And what this opportunity is basically to actually understand how the next 4 years are going to turn out. Because just with looking back the past 4 years, you could see what's going to happen the next 4 years. That's the reason why I could tell you guys to buy those puts on Friday at 625. This was the main reason. By the way, you guys should be selling those weekly puts. All the puts that I told you to buy on Friday, they were weekly. Make sure you get out of every single one of those plays, because when you fall from a 4, the psychology of this market states one important thing, and that one important thing is what, everybody? At least those people who are here. Whoever's here, what do you think that thing states? I hope you remember. I want to see if you guys are starting to remember everything. You missed Thursday? That's all good, fish. Pretty sure you have work to deal with anyways. So basically, it's psychological levels. 1, 4, 8, 9. When you fall from a 4, you're gonna fall down to a 9 or 1, then a 9, then an 8, and then possibly hold, and then start running up into the next number, which is 634. Just like how this market ran into 624. And you pretty much started falling from that level there. It's the same thing. Psychological levels. No, yeah, of course. Anytime. I'm happy the information is helping, you know? I just need to be a little bit more simple, I would say. A little bit less speaking. But still being able to convey and properly give these teachable lessons. Because when I speak too quickly, which is just due to me getting very excited, it makes a lot of the information just be unnecessary. You know, it's kind of like I'm wasting my time and everybody else's time because they're hearing me, but they're not hearing me. Now, if I'm speaking like this, where it's a little bit slower, I feel like this is proper. And I feel like we'll probably have a greater execution. So, of course, that also includes a great entry, a great averaging down process, right? A great recovery process, insurance process in terms of the trades, and then a great execution. As long as we have everything down the list, just crispy, nice and neat, meticulous, and we're able to actually repetitively trade that same way without having to put too much brain into it. You know, because if you waste your brain capacity on the same things over and over again, let me give you an example, right? So with technological improvements and advancements, if you had a typewriter and you were trying to, you know, like the old school ones, and you were trying to write a report in school, it would sound like bells and whistles going off every 5 seconds. Not even, like every half a second. Now that you have computers, it's more silent. So that's one problem solved, right? That's less brain problems that I guess you would have, less brain use, which is what I'm trying to go for here. Now let's say that computer, the keyboard is able to type faster and you don't need to shift the paper and move the paper around. So you don't need to put out brand new paper or change it, which is wasted time. You could just keep going and going. So now you're quicker with that. So that's two things it now solves. And what I'm trying to state here is basically every single time you trade, your thought process every day should be like, how can I combine something so I don't actually have to think about it? So when I just see it happen on my chart, boom, I start actually dipping into the market, dropping some capital here, there, everywhere. And yeah, it becomes consistent, you know. That's why I like looking at this chart, because all my other charts, I have to update them in terms of the shorter term ones. And supply and demand zones, we're still waiting for them. So we'll probably have some new zones that we made today. Let's actually go check real quick. Yep, right here. We have one. So far, we had one zone be created today. And you're also holding on this zone really nicely. That looks like a golden zone to me. So we'll see how it reacts on it today. If it dips below it, of course, we'll see what happens tomorrow. Because remember, these are all new zones that have to be created. So I had to color code them again. Then we had to create new ranges for them again. So it's going to be a whole process again. And last time, it got so crazy that we just kept improving this chart. So as you can see, less things I had to think about. So now I don't even have to remember my notes and what I was saying this other day. It's all just on my chart, copied and pasted for that moment, for that day, as well as all these midpoints. They're all different prices. So everything was very kind of stuck, you could say. It was moving the same way we thought it would for the last 6 months, which was once you hit that floor of 480, we had a feeling you were just going to take. I honestly thought you would take at least till September to hit 630, 620. So you did that a little bit quicker than normal. And I'm assuming it's because of all the war stuff, plus all the bill stuff, plus the future, right? You always got to think about how the news that we get on the political side, because we're in the middle of history right now. It's always going to change the future. It's always going to mean something more later on. So as long as you can kind of have a good nose to sniff out what's good and what's bad, you'll easily be able to catch on to certain trends. Kind of like, remember how we keep talking about certain companies being very oversold? those companies, is as long as they're on the S&P, they make some decent money. All we have to do is just buy at points where it just tells us to do it on the chart. And if we can make an easy chart, it takes 5, 10, 20 minutes. It kind of simplifies the process for one, where you just end up doing a bunch of charts, honestly. You end up doing like 30 charts in a day, and then boom, that's like all the charts you're going to trade that year, which is kind of crazy, I do have to say. Again, 30 minutes of work, you're already done with one company for its whole entire history. But yeah, let's go back to today. Let's see what's going on over here. What I'm guessing is, this is what I'm thinking right now. So far, this looks like a golden zone so far. But then again, you see how it goes through it pre-market and hits this one, then it hits this one right now. We'll have to see if it wants to go a little bit lower than that today. Remember, everybody who was in the calls, you were up 100%. So just make sure you sell out of everything. The next plan for crypto is going to be to wait for Bitcoin to hit a new high of 113 to 116,000. And then at that point, we're going to buy options that expire in 6 months for any crypto company that's really cheap that we can afford. And we're basically going to hold this until 6-7 months from now. And we're going to try to see if we can go in the money. Crypto winter is about to happen again, so we're either going to have it shift and the 12-year trend, 8-year trend, 4-year trend is now going to change, or it's just going to do the same thing it did last time 4 years ago, which was after you hit the second high, you just started crashing out the sky. That's pretty much it. You're even doing the same amount. Let me show you the crypto chart real quick. Alrighty, everybody. See where everybody's at. Is everybody sleeping? What I want to see here is, let me check this other account where I shorted the whole entire market. Yeah, that's insane. So crude oil is up a crazy amount here. Honestly, Alan, if I see newer individuals, like let's just say if I just saw somebody pop up and it's their first day here, usually I can't help myself and I just give them a couple of freebies. But what I then want to see after that is, even if people can't join the Discord, before they even join the Discord, I want to see if they're disciplined. If they're not, and they're willing to be disciplined, that's still something that works for me. But I just want to see discipline. Being able to understand that every single day I need to see notes from you. Being able to understand that every day I require something of you. It's going to be a lot of work. It gets stressful. Emotions get thrown everywhere. So it's kind of like you're raising a child, if that makes sense. Even though, you know, there's the ages inside of this Discord range from 19 all the way to 70. So it's kind of crazy, but no, yeah. Trying to make sure that everybody learns appropriately. It is it is a very hard thing to do, but no, yeah, it's really fun. So I wouldn't say that it's impossible to be able to actually help people at a young age, but no, yeah, it just gets more possible as time progresses. And as I see people progress, as I see people understand and realize the functionality of structure, because a lot of things in this market is kind of funny. You know, depending on how you were raised, the way you see this market structure, it kind of changes. That's what I've noticed. That's like the main thing I've really noticed while teaching. So, yeah, the first week is always going to be very chaotic. Second week should have a little bit more structure. And I'm talking about once you actually take things serious and you're just like, all right, today's the day where everything's changing. I don't need to work at my job no more. I want something better. You want this, you want to change that, you want to change some person's life, regardless of what it is. Just make sure it's a fire that's enough to keep the flame lit, even on the days where, you know, it's like the coldest day of the year. That's basically what I would say. You got to have something that's that impactful that just never dies out. As long as you have something like that and you're starting to create something like, even if you don't have it right now, you could start to create it, of course. And as long as you do create it and you always rely on it, no, yeah, you're unstoppable, honestly. No matter if you're new or old. Like, for instance, there was somebody who I taught recently where I believe he's 2 or 3 years younger than me. I think he's 21 or 20. I forgot, but he was very serious about it, I would say. And his actions, they really did show very quickly. First day, second day, he was already completing stuff that I told people to do, you know, months ago. And he was doing it, you know, that same day, that next day, finishing it very quickly. And the funniest part was that he didn't really have much experience with these apps. So, like, everything was harder for him to do than for people who I've been teaching for 6 months, 12 months. And no, yeah, he did his thing. He did his thing, and he's doing really well right now. He's doing really well. I believe he became funded as well. Yeah, same person. He became funded. So that's cool as well. In terms of pricing, I mean, you could just take a look at the Patreon. I'll send you a link inside the chat if you want to take a look at it. There's 2 different Discords. Just depends on your level of seriousness here. Let me see if I can send both of them in one message. I think it might let me do it. But give me a second. I think this might be too much text. Okay. It's still too much text? No, yeah. That's a lot of text. Let me just send the links. It might also be because it's OBS. I'm pretty sure that's the reason why. Sometimes OBS doesn't allow you to do like certain comments, I guess, on their platform. It's a little odd. Alright, ladies and gentlemen, let's see if we can start diving into some cheap calls here. Of course, the market might crash down a little bit more. So we're just going to take this very slow. Let's not be too risky here, ladies and gentlemen. Let's also look at Tesla. I've been thinking about that ever since the morning here. I think all my Tesla charts disappeared. Yeah, so right now, if Tesla continues to fall here, what you're going to see is it's going to fall below 270. And this thing might actually fall below 213 right now. Now, earnings comes out in a few weeks. So, if it decides to hold and then bounce right back into this wedge, we might be able to see this thing just run right back up to the tippity top, which is around 460. So again, if you continue to fall past 285, 288, you're going to fall right back down towards 245. And then, if it continues to fall past 245, you're going to fall to 247, 248, play puts again, straight down to 209, sell out, wait for it to get below, buy into another play, sell out down here. So just back and forth, back and forth, back and forth. And then at the same time, once you go to make a new low at 160, 180, or 209, whichever low, I would start buying at 209 again. I would then buy another one down here at 160 or in between somewhere. And I would want my expiration to be at least 3 months. That's pretty much it. Just 3 months. That's all. So a 3-month option on Tesla right now, just to get everybody's head in the game here. That is 90 days out. So we're going to go 102 days out. We're going to look at puts first, just in case this might crash down for the next month. So the puts right now, for 102 days out, let's just say for 160, the bottom of the range, it's going to cost around 180 right now. I wouldn't go for those though, it's too expensive. So let's see if we can go 70 days out because you already started to fall. So now we're not thinking that you're going to fall as much, correct everybody? There's less on the table now because you already fell from the top. So if we look at these 74 days out, the 160s are only 127 right now. So that's not that bad. What if we go a little bit shorter out, 46 days out, 1 month? We take it 1 month at a time. Yeah, those options are not even on the board no more. Let me see, did they remove them? Oh yeah, they don't have any options for that point. What about 39 days out? That's so weird how they have it for 39 days out. How about 32 days out? I'm just scanning the open interest here. Yeah, a lot of people are playing puts for earnings right now, and I'm assuming they're just gonna sell out on that same day. The calls are pretty good for 18 days out, but yeah, we might have to wait for earnings before we can actually buy into any monthly plays here. I think that's the better call. It'll be more safer. We are gonna trade this on the competition account though, just to make it a little bit more fun for us. So let's go ahead and scan some 4 days. So some 4-day options. Let's look at the structure. Where are we? That's not what I want to see here. This image, and then let's go down to Tesla. Alrighty. I apologize for that little wait right there. So again, I think Tesla could probably fall a little bit lower to like 281, 282. So I might actually continue to play the puts here. Let's see here. You already fell from here to here. Now you might fall from here to here. Yeah, I think the play right now is to play some puts here. We'll go very light on them, if anything. If we run above 295, 297, just recognize that that's a level where you can now play calls against it for some insurance, just in case it's not going your way. Maybe it might just choose the upside direction for 3 days, 4 days, 5 days. So you can get something for like 2 weeks out. So if I buy a put here and it's $200, I'm going to make sure I can at least buy a call that's $120, $110. I can even go as low as $90. That's not bad. But you just want to retain some level of similarities, which is don't make sure you throw in like $40 or $20, because then while your calls are going down and you're down 150, or your puts, while your puts are down 150, the calls are going to be only up $50 to $60. So it's not really gonna balance itself out that well, you know? That's what you're looking for right now, is an ability to balance things out for yourself. So even if it's going wrong in the moment, it's not actually going wrong. You know, you're still making something in the background. The only problem is you have to keep scalping, of course, right? You have to keep going back and forth, back and forth, back and forth. So that's the only annoying part, I would say. Alrighty. Let's go ahead and take a look at SPY here. Hold on. Okay. So everything's good here. Everything's good there. The one thing I want us to do though is let's go ahead and fix up some of these channels here. We're gonna delete some stuff now. We gotta simplify it. Simplification, everybody. Wait a second, can I save this? There's no way I could save this. I could save it? Wait a second. All right, I'll stop being lazy. Let me let me just send it to myself. I was trying to send the post for from my computer here. This one right here. I'm gonna send it to myself. Let me just. I just send it here. I just send it here for a second. You guys can steal the screenshot in case you always wanted to use it. It's gonna be in the chat section. All right, let's go over here. Let's go over there. Let's go back to here. Now let's go back to here. And when did it happen? It happened about what time? The market fell 12 o'clock. Yeah, so it took us about, that's 10, 11, 12, 3 hours. Alrighty. Is the AC loud in the background? I forgot to ask that. I'm not gonna lie to y'all, I didn't have an AC ever since Saturday. I mean, summer's almost over already. But nah, yeah, it's been mad hot in here. Culinary, you said the market was around 20 cents off of the notes that you sent this morning. Let's go take a look at it. So Culinary's notes this morning was we're at the bottom of a channel. If we break, we could see 619.49, which is one of the first 481 dark lines, and it's also the fourth reversal point. That's correct. You then said if we run up, we're looking for a revisit of 624 and then 627. So the only thing I would tell you to do with this is for the dark line, if you could also add the fraction, that would also help out a lot, so that others and yourself, you'll be able to like easily just snap onto it or remember it. That's pretty much what I did. So for this same trading style, basically right now you're around the equal reaction location. So this location right here is just like the one all the way at the top, which is the full point. However, it got a little mixed up, so this is a little bit wrong. It's not in the correct location, I could tell. So what I would then look at is the full point. And that's pretty much right here. Oh yeah, see, I copied on top of each other. Copied it straight up, that's why it was a little bit wrong. So this point right here, that's 1/16, that's 1/8. Let's go zoom out for a second. Let's look at the bottom down here. And you get a 1/16 point. But we didn't highlight what was down here. Of course, if you're looking at the chart, you would easily see that the one thing that is missing down here is the 132 point. Just like that, right? So I'm going to go ahead and fix this real quick. And then I'm going to copy this. Or I could just delete one now, I guess. We're going to take these now. Or we don't really need to take those specifically, but we'll just go up here. We'll take these two. And pretty much just fix it just like this. This should be at 625, so right around here. A little bit higher than where it's actually at. So right now, as you can see, you're in between the 132 point and 116th point. So that's most likely going to be the 164th point. It's pretty much the reality there, right? So this would be 1 out of 64. Of course, I don't have 1 out of 64 points. Let's just say if you were looking and scanning down the whole entire chart here, it's all mostly only up to 132. And that's just so I don't have too much stuff on the screen. But yes, that one right there would be a 164th point. So that's currently where we're at right now. And it's kind of funny because when you actually fell on Friday, it was near the 132 point, because it's supposed to be right around 625. But if you just measure this down here and you break it up into another box, you see how that midpoint now lines up with 132. So then all I need to do now is break up this box again. And then that's truly where the 164th point is. So I got to move that a little bit. I was a little wrong. And again, that's basically where you just hit, where you fell down to. So if we take this same, area, same size of this box, and we just put it on the top, that right there, of course, you're going to have the 132 point, which means you also have another 164th point here. Maybe I might have to change this. Give me a second. Let me think about it. That's 164th point. Okay, so that's 1/8, which means half of 1/8 is going to equal 1/16. So 1/16 should be right here in the middle. All right. Let's put this a little bit more perfect. So that's the 1/16 point. The next point is going to be half of this, which should be... No, it's not that box right there. Wait, let me make sure I just did that right. So I measured it from up here all the way to Y down here. Give me 1 second. I think I just messed that up. So 1/8 point, and that's a full point. Yeah, I messed it up. All right, I'll fix it right now. All right, so that's the 1/8 point, which means half of 1/8 is going to be 1/16. So this goes down a little bit, which means half of 1/16 is 132. So that's the 132 point right there. We could delete that one. Half of 132 is going to be 1/16. So that's the 1/16 point right there. So it means we could put this one here. Which also means, if you do the math backwards, from 132 to this bottom level down here, right? If you were to measure that, or at least measure the whole entire 132 area, which was basically, it's from here to here. So if you make a box from the center point, which is right there, take that box, and you could just put it below it, and it'll be right there at 132, which is correct, which means half of that is 1/64. So that means up here at the top would be 1/64 as well. We'll change it to another color so we don't get confused. I'm running out of colors here. So again, just with using fractions and with chopping up the market in a certain manner, you're able to see stuff in a way where now you have true structure. Simple as that. So if I zoom out right here, there's levels that we've never even touched, but yet I can confidently tell you where to look for puts, where to tell you that the market's going to continue to go up higher, where it's starting to look a little weak. And it's all just by doing the charting this way. I'll be honest with you, it's very repetitive, you know? You get sick and tired of doing it, and then you want to just run outside and do something else, or take care of something else you got to do throughout your day. But you just need to keep improving the charts, because you take them to a certain level where it's just basically, it's like, imagine, you know, training with a certain type of person in a certain type of Olympic sport, within 4 to 8 years, as long as you were dedicated, you're probably going to achieve the same level that they've achieved. But in reality, since it's them teaching you, and there's somebody who's from the Olympics, you're going to have a much greater chance at being greater than them. So when you're doing the charting this way, the analogy is simply just to tell you that if you really put in a crazy amount of work where most people around the world wouldn't want to do that because of how repetitive things are, right? You can easily get to the next level and easily turn this almost into like a little magical money-making machine. Pretty much. That's the idea here. But yeah, culinary, those levels you gave out, the only thing I could speak of was the fractions and the notes. Everything else was perfect. So that's phenomenal right there. That's what I like to see. Perfect note. Alright, for fish, midday note. Waiting since I was slow to get in reversal point number 5. No FOMO. Maybe another play, another event. Or maybe you will play another event. And then you'll be ready for reversal point number 5 if it hits. Or goes through it. Roger that. And then the note from this morning. Was this morning? July 7th? Yeah, that was this morning. You said bad start to the week. You said flat tire. Oh no. The way you included that in the note. That's funny as hell. Okay, so you said you had a flat tire. $220 it cost you, so that's what we got to make back this week. Lots of work pressure, PC issues at home and didn't work. Next time just call me. Just let me know, because I know how to put together the PCs, so I could probably help you figure out what's the problem. July 3rd, you said you took 24% on a SPY call in 4 minutes, and you called it a day. Excellent. That's what I want to see, is you not being too greedy, taking a small amount, and then just leaving, enjoying the rest of your day, coming back tomorrow, and now you have more money to use. And then you said using charts the best you can. Keep in mind with recent highs and lows, or keeping in mind from the last few days as follows. Not looking for calls up. Maybe a quick 0 day. Puts down to 589 and then 585, then 545. Excellent. Those are all the structure points. I love how you remember them. So you said using yesterday's movement, the wedge box. Excellent. The wedge box is perfect. I'll show you guys what he's talking about right now. So the wedge box is basically doing something like this here. What chart is it on? So this would basically be your wedge box, right? So it's wedges with boxes in mind. So after you created this new box where you went above this area here, of course what you could then do is you could then start taking ranges from last week. So the last low that we had to beat is, of course, like imagine if something is tilting down and it's trying to fall out the sky, meaning for the next 2 weeks, 3 weeks, it's going to be red. When you're actually trying to predict the market doing that, it's not hard, but it is difficult to remember all the components of it. And the way I do it is by attacking every single perspective. So instead of just using yesterday's low, which was very dramatic, or this morning's low, let's just say if I made these charts on Friday, what I would have did and done, I have it done somewhere else, but I have no idea where I put it, honestly. Let me actually check one more chart. I think it might be these here. Yeah, it's pretty much these, your wedge boxes. So these are the wedges, the white lines, which basically what I'm doing with those white lines, I know it looks kind of crazy, but just think about it like this. What I was looking for with these white lines was to hit the top point right there. You see how it runs up right here, then falls down a couple days after. So I take that high. I then take another high from a couple days after. We did have these highs, so before it was kind of like this right here. And this is very important. I'll explain to you why this is very important, but let me just first explain the first thing real quick. But yes, it was like this at first, and when you broke above it, we then decided to actually get some calls right here for you to go higher. And no, yeah, it was completely correct. We then deleted the line so we didn't have too much stuff on the screen. But last night when I woke up at like 4 or 5 a.m., I had an idea, and it was to basically bring them back. So that's what I did. And I'm going to show you that chart again after this. But these lines are simply going from the high to the high. And then you have another, you know, I guess section where it's crossing through right now. This line right here is signifying the midpoint. This line down here is signifying the bottom points. So the lows, right? So this one cuts through the middle, hits another midpoint. This one's at the low, hits another low. Eventually it then becomes a high because it's very sharp. And that's the funny part, is when I delete the middle line, because it's most likely going to mess with your perspective right now. Let me delete it real quick though. So now I want you to take a look at the charts. Isn't it kind of funny? You see how this falls down here, runs up here, falls below it, and then falls for a couple days? You're basically doing the same thing right here. It's like a copy and paste, but it's just a little different. But depending on how you chart and how you're looking at it, it can actually just kind of like throw it right in front of your face, you know? You'll definitely notice it. And it's with these little random technical ways of charting that are very easy to do, takes you 10 seconds, and it allows you to get a really good perspective as to what can happen throughout the week, just because that's how it happened last time. So that's how you had to think about it. The next thing I wanted to explain was, okay, so you can obviously see that the yellow lines and white lines, it's an exact copy, but this is where it gets better. If you actually measure the next day where it starts to crash up to the day where it starts to fall again, actually we'll measure from the low. Measuring from the low, I think, should be a little bit more simpler for us. Let's try measuring from the low. How many days is this? So we wouldn't count that day. We'll count the next day. So that's 18 days. You then collapse right back down. So if I take the same box and put it at the low point right there, at 16 days. Let me see. From this low point, is that the low? That's not the low. Let's fix that. Let's fix this as well. 19 days. Let's delete this one. Bring it over. So I would say, like, right now, in terms of just what we did last week, you probably still have a couple more days. If not, the market's just going to be a little bit more quick now. That's one way where you could chart this. Or you could chart it just like this, where you take this box here and you put it basically all the way down here. I think it's counting the days, the weekends. That's what's bugging me here. So that's what it's doing. That's what I just realized. It's counting the weekends. So let me just count it myself. So that's 1 day, 2 days, 3 days, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. Yeah, so this is what I'm doing right now. I'm not counting the first day. I'm counting the next day where it starts to fall, which is over here. That's 1, 2, 3. Then this is the low. That's 4. So within 4 days, you have a low, right? Then you have 5, 6, 7. You're falling from another high now. 8, 9, another low. 10, 11, 12, another high. 13, another low. And then 14, 15, and 16. Then you start to have a week of downside where now you're changing directions. If you then go back over here, remember, don't count the first day, which is the highest day. Count the next day. That's 1, 2, 3, 4, 5, 6, 7. That's 8, 9, 10, 11, 12, 13, 14, 15, 16. So it's kind of funny how close that is with last time. It could be a little jump and then we continue going higher. Of course, that could be the case right now. Or you're just going to copy what you did over here. So if it gets back above the white line, we'll just play calls. Once it gets right back below, we'll continue to play the puts. Nah, that was weird. I swear to God, the cat just meowed and said mama. What the hell? I just went on top of the staircase and looked at her and she just I swear I thought it was like a doll or something. Alright, so let's go back to the other charts. I think you understood what I was trying to do there. Where's the damn chart I was making this morning? I was fixing up a couple of them, I know that. I could have sworn I made a new one. Let me see. Did I touch anything here? Oh, there you go. This is okay. We're getting close to it. It's somewhere around here now. Come on. There's no way. I swear it was like. Just give me a second, everybody. Let's go through it slowly. Alright, we looked at this one. We looked at this one. Let me check this one real quick. There it is. There you are. Alrighty, everybody. So look. When you look at the chart like this, I know it looks crazy. It looks like a video game cheat code. There's a bunch of ups and downs. Alright. So, back to what I was saying, right? When you look at what the market just did up here, towards the top, we have a wedge from Monday, Tuesday, and then pretty much it's just still down there, right at 617. If you then take the highs, which is this high, that high, and you make that line just follow a direction going up, what you then want to do is you want to see it jump above the line and then hold above it. Since this morning it was already below it, we waited a second for the market to kind of turn a little green, and then we started hopping into the puts basically for the market to fall down. And our intention was, if it was to keep running up against us and we were basically losing the $10, once it goes down to around $4, $5, we were going to buy another one at the top and see if it can actually fall right back down to at least $10, maybe $8. Because when you buy something at 10 and then you buy it again at 5, technically it's at an average of $7.50. So now, as long as it goes to $8, $9, you're actually profitable. So that's what you want to do here, honestly. You just want to be able to buy in at a certain good point, have another point where you can possibly buy into it again with a low amount of capital on both entries. So now in total, I spent 10 for the first play. But then on the second play, I only spent 5. So now that's only $15 in total. So even if I lose the whole entire trade, there was not that much capital on the board to risk. So yeah, you can actually trade a little bit more effectively, more like a robot, more like you're actually trying to do this and make it happen. Because when you have a lot of capital, a lot of money, you start getting emotional about it. Alrighty, everybody. So that was the last chart I wanted to go over. Now the last thing I kind of want to go over right now is this right here. Let me find it real quick. Oh, it's another chart. I don't think it's this one either. There we go. All right, so when you look at our short-term charts, a lot of these charts were made 4 months ago, 3 months ago. So all the stuff you see on the screen right now is, again, stuff we've had for a long time. So you see how it says next location will sell from. Once again, predicting the future before it even happens. Just like how we're going to do it again when it runs up here to 634, 640. We also have a golden arrow right here, which is signifying a potential reversal. So of course, what that means is if you run above it and then hold on it, which is exactly what you're doing right now, you can actually run up to the next golden arrow, which is all the way up here. Again, the main reason as to why I know this is due to structure. If you need to learn structure, of course, that's the first thing I would say to learn. Don't even go on YouTube and watch random ass videos, because it's just going to cloud your short-term memory with useless stuff, which is then going to hamper your ability to actually learn the proper stuff. There's only a certain amount of information your brain could take every day. Of course, when you do this more and more and more, the muscle starts to grow and you start to retain more information and you start to grow more. But in the beginning, you're definitely going to get overstimulated. You're going to be overstimulated every single day, especially if you have a job and families and all this stuff. Nah, yeah, it's definitely a lot of work, but that's what makes it worth it, you know? There's so much meaning that's attached to actually understanding structure, and it's way past the charting, honestly, or way past the money. It really does feel awesome, honestly. Just like how we know that if the market runs above this golden arrow, it's going to run up here to 680. Or let's just say vice versa. If it falls below this golden arrow, we're going straight down to 582. You could probably check back in like a month and we'll probably be down there. Sound like that damn video for a second. The beep 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 beep. But that's pretty much all you're looking for right now. And then once you fall down here, we're going to start buying the market up again. So around 560s, 550s, 540s. We're just going to continue to buy the upside. We might even just wait a little bit more this time, because if you fell down to 480, I think we should probably wait for like, 548 just in case. The politics right now is just kind of thrashing the market around. 1 month you're up, extremely bullish. Next month it's just like the world is ending. So we'll have to give it a moment. But as of right now, in terms of what it's doing, in terms of what we told you to do from down here all the way up to here, this is phenomenal. Let me tell ya, this is insane. It looks like you might actually go down a little bit more here. So the first thing I'm going to do is wait for it to hit number 5. And then I'm going to just simply buy into the market. That's it, ladies and gentlemen. So again, if you fall to number 5 on the reversal points, which is that white reversal point right here on my screen, we still haven't hit it yet. So if I zoom in a little bit more for you guys, let's go. Go ahead and take a look now. Fluffy, please get off the screen. I can't play with you right now. Give me a few. You'll start tripping my stuff out. I don't know. For some reason, every single time she puts her paw on the screen, because it's like a touch screen, it just like destroys the whole entire like Chrome browser. All right, so as you all can see right here, you still haven't hit number 5 perfectly. You came near it and then ran to the upside when I told you to buy the calls around this area. You then came right back down to the same area you're holding, ran right back up to the EMAs. It looks like you're breaking out, going higher here, because now you're touching more and more EMAs, and now they're going to start to curve. However, if you fall way below number 5, that's when you're going to hop into the next set of puts, which is basically, again, puts are downside. Puts mean that you think the market's going to fall. But until we get below it, we're still going to play upside, which is basically thinking that the market's now going to run up a little bit more. And since we already hit number 3 on the reversal points, when we ran back up, what I want to see the market do now is hit number 2, which is 621. Or I want to see the market run up to this first reversal point, which is 622. So again, 621 or 622. So if I go ahead and go to my phone now, let's open up the trading application here. Let's look for calls. Yeah, she just keeps jumping on the damn desk, messing up all the wires. All right. So if we're looking at calls right now, everybody, right? The 621 calls are $30, and the 622 calls are $13. I think you all know which one I'm gonna buy, and you are correct. We're gonna buy some 622s. We're gonna start buying into them now as the market falls. So again, I just put a market order. We're going to buy 1,000 contracts here. And then if the market continues to fall, we're just going to buy another 1,000 at the floor. At around number 7 or 8, we'll average down on the play. Wait for it to jump back to number 6, and then we'll hop out at break even. But we're deciding to buy right now because, again, if I, let's just say, hide everything on the chart right now, right? Let's go to this chart, and let's go to the 5-minute. If I then make those same wedge lines that I just taught you how to make 10 minutes ago, go to the high of today, go to another high of today. Do you see how you just using the same line from here to here showed you that the market could have fell from here? And you see how it did really quickly? So it's like little stuff like that you want to pay attention to, because then if I just copy the same line, and this is where the concept and I would say the psychology changes with most traders. 99% of the people who trade this market do not do this. Simply copy it right down to the bottom. And if we actually, let's be logical about this. The only reason why we have this yellow line here is because of that point right there and because of that point. Which means if you were waiting until 12 o'clock to make these lines, you would have not been able to trade the first couple of moves, which is fine. Don't think that that's a bad thing, because there's more opportunities, pretty much opportunities everywhere. However, if you then take this line after you did this little touch up here and you put it right back towards the bottom after it actually hit that high the second time, you would have had about 10 to 15 minutes to potentially hop into a trade to actually trade this here. So now I'm pretty sure you guessed it. I'm going to take the same line again, and I'm just going to copy and paste it to the bottom. The reason why I'm doing this is because if I hover on top of these angles, you see how they're all basically all the same angle. Negative 28.5, negative 28.5. So what I want you to think about is change your understanding and your perception of the market, and just think about it like this. Every day has its own degree. Every week has its own degree. Every month has its own angle and degree. Every year has its own degree. That's the reason why I'm able to trade so well. Just like that, everybody. Simple and sweet. It's all about angles. It's all about degrees, because degrees equals speed. If it's traveling at a 33-degree line, by a certain time, by a certain point, it's going to reach a certain price. Does that make sense? It's like you're triangulating it with... And you know what's the funniest shit? In high school, I used to be terrible when it comes to geometry. I remember I used to get terrible grades in geometry. And it's like that's literally what we're using right now. So, again, that right there should have changed everybody's perspective. Even those that are listening on the Discord right now. I hope that that made you understand some things better. All right, ladies and gentlemen, so we bought 1,000 contracts of 622. We're going to buy 1,000 more if this falls down. It's crazy because we're just using profit that we made earlier. So this is, again, all profit, just like I told you I was going to do in the morning. Whenever I make profit, I'm only allowed to use a quarter or half of the profit. That way, my day is never going to be negative, you know? Because that's also another problem I see with a lot of traders. They'll trade in the beginning of the day. They'll do really well. And then all of a sudden, they'll keep trying to force trades to work or more profit to occur. And because the way these contracts are... So the reason why we make so much money doing this is not regular stock trading, of course. If you buy something for $200 and you sell it for $250, you made $250. You made $50, right? So it only went up 50. Now with options, if a stock goes up $50 with just using $200, I kid you not, if you time it correctly, which of course it's very hard, but it is doable. But if you time it correctly, $200 would turn into around 1,000 to 2,000 easily. It might even be 3K. A $40 move on Tesla, for example, usually equates to around 1,000%, which is times 10. So if you go up $50, yeah, you would probably go up like 1,500%, which is times 15. So, yeah, you know, $200 times 15, that's a lot of capital, you know? That's like an insane investment. And the craziest part is you're doing it 6 times, 10 times a year with the same stock. And then using whatever I teach you, you're taking that and throwing it onto Apple, Microsoft, Google, and you're basically repeating the same thing every single day. So that's the best part about this. It works for every stock. It works for every company. You just got to repeat it, rinse and repeat. That even means the contract values. It's the same thing. If a stock costs $200, the only difference is the momentum, meaning the amount of people that are buying it. If there's less people buying something, your option is going to be a little bit harder to get into. It's going to be possible, of course, but a little bit harder to buy. And you're going to have to, you know, spend more money than normal. when an option has a lot of volume and a lot of people buying and selling it, it's very easy for the price to shift, just depending on how many people are buying the upside or buying the downside, just like that. So just depending on how many people are buying up and down, the market momentum shifts. And as long as you can understand why it's shifting, like if you pay attention to my screen, you would see that this morning when we fell, you weren't even next to most of the volume, which was up here. So if you look at the right side of my screen, this is where all the people are buying and selling. You just simply drop from that area back down to the next massive area where I had a lot of volume. So if you continue to fall here, all you gotta do is zoom out, look for the next peaks, just like that. And that's how you know where the market's gonna fall to next. This is an indicator, so again, I don't really like indicators. I'd rather use my own trading styles where I actually have to draw stuff on the screen myself, not a robot do it for me. But, you know, the indicators, they do work. It's just you have to understand how to make it work for you. Everything works differently, of course. Some indicators, they teach you what's going to happen in the future. Some indicators tell you what happened in the past. Some indicators tell you what's currently happening right now. So it's all different. That's why this is such a hard thing to master, is because there's so many different things to master in the first place that you actually have to really structure your learning process. So that's what I focus with right now, honestly. It's just the learning process. Because then it makes me understand where my shortcomings are at very quickly, because I'm automatically in a mindset of teaching and problem solving. There's no such thing as being stuck. There's no such thing as taking a loss and that next 2-3 days you can't turn that extra loss into a win that makes you actually make more profit. It's all psychological, you know? It's like frequencies, right? As long as you stay at that high frequency and you don't change it, the next day you'll have the same performance. You'll be in the flow. You'll smash it out the park. You're going to sell early just like I told you to. You're going to be happy with 20%. Because when you stack up 20% over 20 days with just $10, let's just say you do 25% in 10 days with just $20, you're now at $100, right? Let's take the whole month, which is about 20 trading days, not including the weekends. So about 20 days every month. And then we take this percent, leave it at 25. Now you're at almost $1,000. So now if I just put $100 here at 25% per day for 20 days in a row, by the end of the month, I'm going to have almost $9,000 from just $100. But again, most people, they want to rush it and they throw their money into something that is not as smart. They get a little overconfident. It happens, you know. But it's just your ability to make the bad stuff stop happening and understand how you can always mitigate your money, you know. Because if you're out the park, nobody's going to come to save you. If you don't have capital to trade, it's like nobody's going to help you, you know. So as long as you could use a small amount first, start your cheap accounts, start your $1 million accounts where you start with $4, $5, $10, and actually learn the structure. Don't just be fascinated by the amount of money you could make. It is ridiculous. I'm telling you, like, it's ridiculous. That's why I'm telling you, there's no point to even try to understand the money you could make. Just try to understand how to trade in the first place. You're going to turn around one day, you're going to have 3,000, 5,000 in one of your accounts. You're going to trade efficiently for the next 5-10 days. You're going to look back at that account and you're going to be at like 50K, 60K, 100K. And then that's when reality hits, I would say. Because even at 60K, that's nothing. You still got to give half of it to taxes. And then the other half. And by the way, this is before you actually create your business accounts, which I show you how to do it on the Discord. But until then, that first year, you're going to have to pay half of the taxes. And not only that, most cars and most houses and most things, it costs way more than just 30K, 40K. So now, It's like you have a lot of money, but you can't really do nothing with it. Even when you hit 30K. Once you start hitting 40K, 50K, 60K, 100K, 150K, 200K, that's when the game changes. Because now you could just take out half of that for taxes, take out the other half, throw it into a house, start another business. There's so many things you could do with that other half where you can now grow your money with multiple different avenues. It's just you want to be able to have the same path in terms of just getting to that next level. You know, you don't want to fall behind. This doesn't take you 6 months, 12 months, a year, 3 years. It takes you 1 month of you truly wanting it. As long as you want it, it's going to happen. All right, everybody. I like how that first contract, we sold it for 240%. Just properly playing the structure with the downside, with the days. Just using everything that we can, everything that's in front of us. Actually wanting to try here and actually wanting to take this to the next level. No, yeah, just perfectly worked out. So yeah, I can't really say anything about it. It was a perfect trade. We'll go over it after, if anything. We just simply bought at number 1, held all the way to number 4. And then now we're waiting. We did buy at number 4, which was like right around here. So we're in calls right now because if I shift the chart again to the side and I put a line at the bottom now, just like that. Do you see how me just seeing this area and that area, I'm automatically able to now tell that it can hold as well on this line, which I'll change the color, that blue line right there. Do you all see how I could make that assumption? Because of this touch and then that touch right there, I know it's going to touch it over here as well. And if it does, I could buy something saying the market's going to go up. So that's the point. That's basically what I was trying to explain. I just didn't finish the explanation right there. And then what I could do with this blue line is watch this. I can then put it over here to that last low over here. And that's the next area that we want this market to run into. So if it just stops at the yellow line, that's like the midpoint of the blue lines, right? You got to kind of turn your head to the left a little bit and you'll see what I'm saying. And it's kind of funny because then if you do this now, this is the wedge box that Fish was talking about when he wrote his notes this morning. If you then do this, now you can actually see all the structure. You can see both diagonals, right? Both trajectories. And then you could see the horizontal trajectory. So now you take it from a 1D perspective to basically a perfect 2D perspective. Most people, when they chart, they only look at one direction, which is horizontal or vertical or diagonal. They don't necessarily pay attention to what's actually important, which is all possible directions. And as you can see, you're stuck at the quarter point of this white box right here. So that's kind of funny. We can actually put it up to the midpoint over here. So you're right next to that quarter point. Once you get above it, we can then say that the market could run to 621 again. Only because this is the midpoint of today. If it falls below the blue line, that's how you know to continue to play puts, by the way. And then when you hit this yellow line here, because over here you held once, right? You might hold again on it, so I would just watch out. Maybe you take a smaller gain this time. And then this is where the understanding of different contracts comes into play, because most people, when they first start trading, their main problem, honestly, if I had to say, it's not understanding what to buy. That's pretty much it. But when you look at the market like this, it pretty much tells you where to buy, where to sell, if you should hold it for only a little moment, if you should hold it for only a little while, if you should hold it for a little bit more minutes, right? A little bit more time. Pretty much tells you everything. Like, for example, there's many times where you get in between a blue and purple line. So not this blue line right here that I was using for the uptrend, for the upside, but you see this little line that's following the price action, that blue one right there. So there's a lot of cases and a lot of times where it runs in between the blue and purple, and every single time it does that, I shouldn't say every single time, but let me say about 80% to 90% of the time it runs into the area that's in between that blue and purple area. The market reverses right back down. So you see how it does it over here, which is kind of funny. It did over here. That's one time. Over here, that's 2 times. Over here, that's 3 times. And it's about to do it right now. Maybe. So the reason why I actually got calls here was mainly because if it already did the touch of the purple and blue line, what my brain is now thinking is, since the market is a progression system, as long as we went higher than that previous line, which we definitely did here, you see how you're about a quarter of the way from this purple line? Then over here, you're even lower. Over here, you're basically as low. Then you literally almost touch the purple. That right there tells me you might actually touch the purple now. If not, because it was only touching the blue over here, and then you almost touched the purple, now you might get above the purple. So it might be a little bit more explosive than normal. That's why I actually traded right there. Is because now there's actual potential here. As long as there's potential, I'm in. I like the way it looks. So yeah, that's pretty much it. That's really all I have to say in terms of the trades so far for today. As long as your trades have potential and you're able to actually understand where the potential is, where you can get sold off from, where some craziness can happen, you're always 2 steps, 5 steps, 10 steps ahead of the competition. Let me see. Okay, everybody. So that's pretty much everything for today. And then you see how I just taught you how to do that for today? You then take that and you then do it on the weekly, and then you do it on the monthly, and you pretty much get something crazy like this here. So it's like while the market was running up into new highs, I was always able to see where the major points were. They would basically take you out or make you sell off, just like over here, just like there, just like there, just like over here on Friday or Thursday, because the market was closed on Friday. And it was just from these small arrangement of days over here. So this is where it gets crazy, right? This is why I specifically say that we're predicting the future. It's because we actually are using a small amount of data from the past, just like how AI is able to write you a quick little essay. It just uses information from the past, bunches it up together into one easy quick thing, and then spits it out. And that's all you're doing here. You're just using data from the past, bunching it up, spitting it out, and you're getting some proper directions here. I'm just going to take a look at some charts here. So you basically got above the monthly call area for a second and then just shut right back down to the monthly put area. So if we hold here, of course, we could easily see the market run back up into a newer high, like 634, 640s. So we just got to be careful here. With how the market fell to 480 from 613, the first thing I would tell you, ladies and gentlemen, is make sure you understand that if a market fell $130, when it runs back up to that same point, you can now run up $130, which means the next high that we could run up to is going to be $740. Simple as that. Equal reaction. Okay, so this chart looks good. Pretty much fell from that little quarter point. This chart right here, you're already falling. Let me look for the chart that I made the other day, which shows you where this market's going to actually fall to. I drew it on only one chart. Oh yeah, then we could look at some other names here. Let's have some fun here. As you could tell, I had to organize everything again. It got out of hand real quick. No, I already looked at these, so it's not this one. It has to be this one over here. Nah, yeah, it's probably this one. There you are. So again, with the little trajectory I drew, I made it a little bit more aggressive than the last time you fell down. And the only reason why I did that is because you have more aggression running up, more momentum running up, meaning if it shifts to the downside and things are going to fall out the sky, the market could simply start crashing just from around this point very quickly. It might even do bigger drops than last time, which is so far it's about the same, honestly. It's not really that different from last week. So yeah, we'll see. We'll take this very carefully. I want to see if the market's going to hold here and run up a little bit, just a tiny little bit, and then fall right back down overnight. That's the main plan right now. Got that, everybody? All right, so let's look at our short-term charts now. United Healthcare is crashing. I still have to fix the buying points for it. Nah, yeah. We're just gonna let it be for a second here. I was like, what is that? Comments? You got Google crashing from the top. Let's put this chart back on Tesla here. So you already hit the bottom here. You held, you ran up higher. Straight up to that top one. So that means if you fall through this blue line here on 275, Tesla's most likely going to just crash right back to the bottom here, meaning going to 240 and then right back down to 212. Of course, with 180 and 160 being in mind. Let's go to Tesla here. I'm going to be looking at some more calls in a second when you fall a little bit lower. That's not good. What happened to the rest of the charts? Yeah, Nvidia looks so good, let me tell y'all. These potential puts here the next couple days, they're gonna be insane. I'm looking at buying some 14-day out puts on Nvidia here. Now since you hit number 5 on the reversal points, let's go ahead and buy a call. Quick, everybody. Go, 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 go. Buy your calls, buy your calls. The 621s are pretty cheap. The 620s are pretty cheap. Just buy what you can. Instant wake up right there. Again, I'm looking at the 620 calls. 620 is only for reversal point number 4. So I just want to see the market run up from number 5 right back up to number 4 here. Going very light. Once you run up to number 4, we're going to start selling out the contracts because we're going to be up at that point. Okay, we just bought in with the rest of our contracts here. So now we're fully into the play. We're not going to put no more capital down. We're also going to average down on the other play. And then at this point, we're going to leave NVIDIA alone until SPY runs up tomorrow. If we just continue crashing out the sky, we'll wait for it to hit number 6. See if it's going to reverse. If not, play the puts below number 6, going down lower, just like we talked about in the morning, right? So you're holding on the bottom of that blue line. Just be a little patient, everybody. Okay, so once we get below number 6, the first options that we're going to hop into for the downside is going to be a 615 play. So again, if we get below number 6, you see how we're holding right here? If we get below it, we're going to hop into a 615 play. Now the logic behind this is because if you look at the reversal points, 617 is going to almost perfectly match up with number 8. However, it kind of matches up more with 516 and 515 now. So I just simply want this to fall from this red line right back down to this pink line. Simple as that. Again, this was lines that I've been using since last year and just copying and pasting them as the market's been moving forward. I didn't copy and paste them above. And the reason why I didn't do that today is because I wanted to show you guys how effective these lines are, right? So it doesn't touch none of these locations here. So now let's go ahead and actually copy and paste the lines. And let me show you how crazy this is. So we're just going to copy and paste it like that right there. Move everything to the side here. Make sure we can see everything on the screen just like that. I think I deleted one of these lines by an accident. I think I messed it up a little bit. Let me see something real quick. I mean, it's fine. It's whatever. It's not that big of a deal. Alright, so let's go ahead and put this into his own group. Honestly, I'm going to take the time probably this week to redo this whole entire chart just to make sure it's actually still perfect right now. Just in case. Every 2-3 months I tend to check it and redo it. Takes me like 4 or 5 hours, so whenever that happens I'll tell you guys in case you want to join up. But for now, nah, yeah. We're just going to use it like this. Just give me a second. And the one thing about me when I chart is, again, just moving it and it looking good is not good enough. I need to look as closely as possible. Zoom in as much as possible, because now you can easily see how it's not perfect. And then let's try to zoom in one more time. Yeah, when it becomes when a diagonal line becomes a vertical line, usually that's when I tell people, like, that's it. You don't gotta zoom in more than that. That's good enough. So now let's zoom out all the way, everybody. And let's go ahead and take a look at how today reacted off of the colored line. All right, you can stop zooming out. What the fuck? What the fuck you doing? Okay, so now looking at the lines, right? Look at how wild this is, ladies and gentlemen. So the lines you were at this morning were the golden ones, which is the midpoint. You then fell from the midpoint, which is the golden and the orange, to the green, where you held. Where you could have bought a call right there on that line, sold it right there, bought a put on this line, sold it right there, bought another call right here. So depending on how you play with these styles, there's so many different trades where if you're just getting in and getting out of different areas, it tends to be a very insane reaction, simply put. You tend to always get the insane reactions right around these lines. So yeah, it's kind of cool. So now using this red line down here, we bought a number 5. It held on number 6 just like we thought, that red line. Now we're waiting for our options. And we'll see how much profit we can make here. I'm trying to change the color of the background so we can see it a little bit easier. There we go, that's way better now. I just changed the colors a little bit. I'm about to go grab some water here in a second, so I'll be right back. Remember, don't panic. Do not panic, ladies and gentlemen. Also, if we go over here, look at how it's holding on that same line from earlier, just like we talked about. So I held on the blue one for a second, which was correct. However, it just broke right through it right after. We bought more right around here, which is 618. And then it fell a little bit lower than it. We're still waiting to buy more. We're not just trying to play too aggressive in one little location. Imagine if the market crashes $10 right now. That's what you have to, how you have to think, honestly. Because the market wants to drop $20, $30, $40 any second now. That's the one risk. Let me check one more chart. This is the most important chart out of everything. Yeah, 614. So you might fall down to 614 here. That's going to be your all-time DARP right there. We can also bring up my other account I haven't showed these charts at all today, so let's go ahead and take a look at them. I haven't updated these, by the way, so I'll still need to do that. But we're going to save that for another day. Yeah, SPX looks like it's basically starting to crash here. Ladies and gentlemen, I think we might have the start to this stock market crashing. Yeah, look at all these charts. Even Tesla here, literally. You see how I have a box here saying to buy here? Wait a second. Let's take a look at Tesla. If we hold here, we could easily run right back up and fill this gap from the other day, which is up to 315. So we can go ahead and grab some 310s here. That wouldn't be a terrible idea. 310s is going to be right around the midpoint. I think the actual midpoint is, let's go check the other Tesla chart. Midpoints are right around 320. So 310s are basically for a run right back up to here, which is the gap fill. These are also 4-day contracts, so it's a little risky if you don't have capital that you've profited with. If you made some profit, I could tell you, yeah, that's no problem. You could buy. But if you haven't made some decent profit today, I would say do not buy this at all. You're literally at 618. Let's take a look at SPY again. Just bought a tiny bit more SPY calls here. Right on the red line right there. Just a tiny bit more. Alright, let me go get my water now. All right, we're back in business, everybody. Nice little jump right there. Went ahead and got some food. After this last trade, we're gonna take a break. Probably until like 3:40, 3:30. Then we'll hop right back on. Let's go ahead and check where the 200 is at. I think it's all the way up here, yeah. I think it's in the sky right now. The 200 is basically that red line that I'm referring to. A little bit of some spice on top. Come on, Spy, keep it going. All right, now this thing is going crazy. Now I'm going to start to sell out. Okay, so one of them is up 16,000. Again, it's time to start selling now, everybody. I'm going to sell out of one of them, my most expensive one that I'm up on. I'm just going to take my gain here and run away. Again, market sell. Don't even mess with the limit sell. Just sell right away, instantly. The rest of the other trades that we still have, the 620s and the 622s, we're just going to wait for those. Oh yeah, look at that jump right there. There we go. That was a nice price to get sold out. There we go. That's excellent right there. That's awesome. We got sold out for 20K right there. We're down 2,000 on the 620s, and then we're down 6,000 on the 622s. So we still have some money we could lose here. There's still some capital on the board, so we just got to be careful. But everybody, remember, you hit the red line, and I told you, run right back up to the next line. So once we get above this line, which is around the point where we bought last time, right around here, right? Then we're going to wait for this line to touch. If not, we'll wait for this orange line all the way up here at the top at 622. And that's pretty much it. If the market falls down, we're just going to buy more calls at the bottom. That was the reason for us selling out right there. We're just going to buy more. So now with that last trade, we just jumped from place 3,000 in the world. We fell all the way down to 3,000 in the world. We lost 40,000. And then now we're right back at 124K. So now we're placed 200 in the world and climbing because we still have more contracts on the board still. So far today, we're up 35,000 on SPY with 3 different trades. Looks like a decent V shape so far today. The 200 on the 15 minutes right here at 620, so we just got to watch out for that one there. This also checks supply and demand zones and see if you made some new zones. Come on. Did it make some? It did actually, yeah, right here. So you made another supply and demand zone, again. Right next to the other one. I know they're all just random colors right now, but just give it some time. We'll fix it. Let's see if we can spot some more opportunities on the board here, everybody. Alrighty, let's see. Tesla. So we bought Tesla. We're in the calls right now on Tesla, actually. The reason why is because a couple months ago, when I made a certain chart, I specifically stated to buy down here. So that's exactly what we're going to do. We're just going to listen to what my chart says. Tomorrow we'll see if we have to average down, if not buy into something else. But yeah, for now we're just going to keep it like that. And look at that, everybody. XRP just fell out the sky again. That's where we sold it. And then right here is where we bought it. Okay, so the next time we're going to buy XRP is going to be right around the 200 moving average. So right around the top of the box again, probably. And then we're going to hold for a run up to basically right here. So that's going to be a bigger trade. More potential there. Microsoft. We still have our put for a year out. Forex, let's leave that alone for a second here. Let's go back to the futures. Let's make sure I added corn to the list here. Corn futures, ZLE1 or ZC1. Let's go ahead and put this up towards the rest of them. All right, perfect. So futures group 2. Okay, so what should we look at first? Oil, because my oil stuff is absolutely in the sky right now. I think I want to sell out. Let me show you. Let me show you all what I did here. All right, everybody. So you're watching. So we bought oil for the first time here, and then we bought it again right down here. This is futures, so it's not technically the same thing as what I normally trade and what I teach people. However, futures is more risky, but that also means there's more money to make. So you can make even more money than how I make on a day-to-day basis if you just trade futures. It's the same thing pretty much. The charts are made the same way. It's just there's so much money that gets thrown into this that this actually controls the stock market. So the way you should think about it is with futures and options, it's compressing the shares. So you're getting 100 shares of a company. So if it only goes up a little bit, there's a multiplication. There's a certain amount that your contract gets multiplied, which is called delta. That delta changes. There's actually another measurement where it tells you how much the delta can change up or down. But anyways, the delta is how much you can make. Delta times whatever amount of contracts you buy, that's basically how much money you can make. So if you put $1,000 into an option and it goes up, let's just say $3, you could turn $1,000 into $3K easy. Think about it. My trade I got into this morning was around $10. Let's say if I put in 1,000, what price did I sell it out at? $34 each from $10. So that means if I put 1,000 into the market there, I would have been able to sell out for $3,400. Basically, is what I'm saying. With futures, the problem is what you trade. So depending on what you trade, it costs a lot of money to even trade in the first place. Like most things chart, like you need to have at least 1,000 to 5,000 to 10,000 just to be able to trade this right here, which is on my screen. So it's way more expensive, way more risk, but way more reward. Just for me buying down here, this is a paper account. Remember, hear me loud and clear. A paper account, meaning not my capital. On the E-mini crude oil stuff, together we're up about $294,000. So $294K just off of this one name right here. Let me see, does it show you where I bought? Yes, it does. Okay, so I bought oil. What day did I buy this? I bought this on the 26th. So again, I bought into oil right down here on the 26th. After I bought it once up here, I then just continued to just average into it, buy more. And yeah, that's pretty much what this looks like now. Let me take a picture and put it on the screen actually. So let me go here, take a picture of this, and let's go ahead and take a picture of this. Go here, like that, boom. Now what we're gonna do is we're just gonna sell out right now. Sell to close. We're gonna sell at a market order, and we're just gonna sell everything. Get it all out of here. All right, so we just sold that for 196K. The E-mini crude oil is now up 101K, so now that's 294K. We're also going to close this out right now. Market order. Sell. All right, so we took that profit as well. We're also up on gold. So let's go to that chart next, just to show you. But first, before I even do that, let's go ahead and take a picture of this. Okay, now let me send it to the Discord. Okay, so now if I go on my computer, let's go to the Discord. Let's go to the futures trading section. And let's see if I could just copy and paste this here. Copy image, paste it. Excellent. That's perfect. That looks beautiful. Copy image, go ahead and paste it here. Excellent. So now you can see how I bought over here on the 26th. You can also see how, copy image. I sold it up here. Actually, I don't want that there. I wish I could change the background color for this stuff. I would make it like green and red. That would look a little bit better. Now I could definitely see this fall down to the midpoint. So now we're going to go short on oil. So let's go ahead and first take this picture and post it to the Discord real quick. Boom, just like this. Go here, go over here. Okay, so now we're going to short it. Let's go back on the phone. Let's go over here. Let's go to quotes. Let's go to trade, sell. Make sure it's a market order. Okay, so we're selling the futures now. That's one of them. That's E-mini crude oil. Now let's do the bigger one. Trade, sell. Alrighty. Oh my god, I posted it in the futures section. The Forex section. That's all good. Let's do this. Let me do it again. Give me a moment. Now that I posted that, we want to hold this short until oil hits 66.97. US oil Okay, so we did the US oil stuff. That's done with. Let's go take a look at SPY. See what SPY is doing over here. Looks like we ran up to the next green line. Ladies and gentlemen, just like we wanted to, you are getting sold off here. So let's go take a look at the contracts. We're number 99 in the world now. So now we're making a lot of capital. That other trade is up 10,000 right now. And I'm assuming we were probably up like 20K at the top right there. That's when it hit reversal point number 4, ladies and gentlemen. Number 5 to number 4. That's about 10,000, 14,000. It probably even hit 20,000, honestly. Let's actually take a look here. Let's not guess. Let's go now. So the prices you just hit were what? Let's go look at this on the 1 minute. So you just hit basically $70 a couple seconds ago. So $70 would have equated to about, give me a minute. Yeah, 20,000. So that was 20,000 profit right there. Let's go take a look at one of these other charts here. So remember, what was the main idea when we were trading around this blue area earlier, everybody? We told you we wanted to see one simple thing occur, and that's either 1, you fall down and hit this line and hold, or 2, you simply start to run up and hit this next blue line up here. So that's all we're looking for right now. All right, for gold, ladies and gentlemen, we ended up buying gold on the 26th as well. So let's go take a look at what the prices were on the 26th for gold. So for gold on the 26th, what time did we bought? 10. So we bought a little bit earlier, right? 10 o'clock? Yeah, 10 a.m. So let's look at 10 a.m. on the 26th. That's about right here. This is gold mini. So this is August gold. Is this the same one? Let me check. Give me 1 second. Yeah, pretty much the same one. So we bought right here. Right around down here. Right around there. It's a little bit lower than where we're currently at. That's crazy how I think you were up like 300-400K on this. And then we were down like, I think like 200K. Now we're up 100. So what I'm looking for is basically a new high, which I'm sure you would understand that if we've been down 200 just because of that, if we flip all the way up here, that's going to equal probably 900, 800K. So yeah, we're real patient with this one, to say the least. Gold might fall out the sky though. You've hit a crazy new yearly high. Let me show you the other gold chart. Right? And you're still managing to retain this weird trajectory. So that's one of the reasons why we just keep getting into this trade here. It's just because you keep holding. So if you're going to keep holding, I want to see if you're going to touch the midpoint now. So that's right next to the point where I'm talking about. And then if you go above it, which is just simply to the top, which is what you did right here and here and here and here and here, pretty much all the way down. Look at this. It's crazy. So if we just follow the same trajectory, yeah, we could easily see this hit the midpoint. So we're going to let that rock for a little bit, give it some time, and then, yeah, we'll probably pop back on in and see what's going on here later on. So let's head right back to SPY now. SPY just simply fell right back down to this green line over here. We'll see if it holds. Now we go back to gold. Okay, so gold, we're in the trade down here. Actually, where's the 26? We're in the trade from over here. We bought right underneath the quarter point. We wanted to see it run above and then hit this quarter point. So that's going to be the equal reaction for our trade that we got into. But for what the market did, it went a little bit below it. So yeah, you could definitely see this pop out to a new high just for a second. It's definitely possible. So now let's go ahead and take a picture of that stuff there. Just give me 1 second. I'm taking some pictures for you guys. Let me see. Order history. Okay, now so that's when we bought it. Or that's how much we bought it for. And then that's the day we bought it. And then what we could do here, be pretty nice if we do this real quick, is we go here and then we just take a picture of this for here. Let me see. The Tesla trade, we're up 3,000 right now. So that's picking up for some of the slack from SPY. We still have a 622 contract for SPY right now, the calls. I want to see if this could run up to the top. Still looks like it's like kind of turning a little bit. It kind of looks like a perfect V-shaped recovery here. Which, as everybody already knows, that's what most days actually end up being for Monday. All hail the magic conch shell, everybody. I've been secretly using it this whole time. All right, everybody. We're getting ready to sell everything here. Last 10 minutes of the day. Let's see what's going to happen here. You're right back at reversal point number 4, so remember that. Okay, we're going to start selling everything here, everybody. There we go, ladies and gentlemen. That was a really nice play right there. Even worked out to the last 9 minutes of the day. That one was a close one. If it keeps running up more, we still have another set of calls. I'm just going to let it expire worthless if it doesn't want to run up higher. That's fine with me, honestly. So if it happens, it happens. If it doesn't, it's okay. We'll lose only a little bit of what we made today. Tesla stuff is still up 10,000. So again, we got calls for Tesla. Come on, run up a little bit higher. Hit that golden line right there. Hit the VWAP. Come on. No. 7 minutes left on the board, ladies and gentlemen. Let's see if we're going to get some extra profit here. We'll give it a second. We'll let it rock. In the meantime, I want to check. These other trades real quick. The oil trade we got into earlier today, we're up 10,000 on it right now. So that's pretty exciting. Let's see if we could maybe sell this out for like 100 and... You'll have to see. One more minute to go. Then we have the last 5 minutes. This is the most amount of volume you will ever see in a day. It always occurs in the last 5 minutes of the day. It's even more than the morning, by the way. So everything's going to plan. Honestly, besides the 622 calls, I want to see if we'll be able to run up just a slight bit higher, gain some value from those. See if we can sell them for a profit here. Come on, SPY, keep it running. Keep it going. Oh yeah, let me show you the other chart, by the way. While SPY is just running to the upside here. Let's find it first. Was it here? Nah. It was when I started at 9:30. You know what I could do? Let me see, can I replay the video? I can't find it. It's gonna take too long. Alright, let me think. The only charts that I changed here were if we go to the Tesla charts and we switch these to SPY, we might find it easier like this actually. Nah, that's not it. How about this one? Yeah, I absolutely have no idea. I'm not too sure. I thought it would at least be on the main ones. We kind of did a little bit there, but that's not really what I'm looking for here. What I'm looking for... There we go, nice little explosion on the SPY. Look at that. Right at the VWAP now. Excellent, everybody. And now since we're at 622, the next thing we could do here is we could look into SPY options overnight. The only problem is it might just run up and fill the gap first. Remember, you didn't fill the whole entire gap. You have a tiny little bit left. So you might just run all the way up to that new high, the new high, which might be pretty much 625, 626. 625, 626, yeah, somewhere around there. The Tesla option is now up. Yeah, so we were up 13,000, dropped down. We were only up 6,000. Now we're up 7,900. Alrighty. We'll grow this account a little bit more tomorrow. So far we did 20% today, so that's pretty good. That's not bad at all, honestly. What chart did I touch earlier? It must have been in the pre-market video or something. Oh, there you go. We found it. Yes. Yes. Look at that. It's crazy. So yeah, I might buy some puts for us to fall down to like 615. Because if you look over here, when you fell down, you would run right back up 2 lines, fall down 2 lines, run up 2 lines, fall down 2 lines, run up pretty much 1, 2, 3 lines, almost 4, and then again fall down 2 lines, up 2, down 2. So you're pretty much just doing the same thing over here. Down 2, up 2, right? Down 2. So you could probably run up to 623, 622. That's the reason why I don't want to get the puts. I'm not trying to rush into the puts, honestly. Is because I know it could probably even pop up above here just to fill that little gap and then just collapse. And I'd much rather us just wait for that better entry. Yeah, this is awesome. Yeah, you might just collapse overnight straight down to 613. Let's hop into something here. Let's have some insurance for the downside. We still have 14 minutes to get into a trade here. We're number 170 in the world now, everybody. So again, we were 4,000 on Friday. Of what week was it? The 27th. Heat advisory. How hot is it right now? So we were down. I don't even know how much we were down. We went from 70K to 30K to 20K. Then we went to 16K, brought it back up to 50K. And that's pretty much it. So that was all last week and the week before, right? That's all we were trying to do is rebuild this account, touch the bottom as far as we could, and then start gaining some profit after that. Try to see if we could work our way right back up. Yeah, so we're just gonna wait. We have the Tesla trade on the board right now. So since we got the Tesla trade on the board and we're in the Tesla trade, we're just gonna wait. We're not gonna throw too much capital into the market right now. So even if it falls here, ladies and gentlemen, remember we already have puts for this market to fall down to 580 and to 560s. So even if it falls, that's okay. We already have stuff on the board. It's just for short-term stuff like 5-day stuff, which usually makes a little bit more money. And the only reason why I say that is because you could buy stuff for a little bit cheaper. So you could buy, instead of buying something for $500, you could buy the same thing for $100. The only difference is going to be maybe 10 days of time, 15 days of time. Because remember, these are options, right? They expire in a certain amount of time. If you're just buying stocks, they don't expire, so you can hold it forever. But with options, you have to be right by a certain time. So the best way to trade them is to always not buy something that's that far out, which is usually something that's going to cost something, right? Something between the lines of 50 to like $150. That's usually what you're going to have to spend in order to make consistent profit. If you're trying to challenge yourself and you're trying to actually test full ranges, kind of like how we did it today, that would only be through trading DARP, but of course 0 days and 5 days. So once you get away from the 5-day contracts, wait a second, give me a second. How the hell did these calls jump right back up? What is SPY at right now? Wait a second. No, yeah, that's so wild. They dropped so quickly right there. So yeah, they didn't go up. I was looking at it wrong. So is there anything else I should go over with everybody? Not really anything else, honestly. We have stuff on the board. We're waiting for this market to drop to 580. Big old drop. Monthly puts. You know the strike price, you know the time, which means tomorrow and the next couple of days, we're just going to be working on making sure you're playing both sides at the same time, because you need to be playing both sides at the same time, but for different reasons, right? It's not always going to be at the same moment. Not every single second of the day you're going to have both contracts on the board, but let's just say for the first half of Tuesday, you might have a little bit more calls on the board than puts, which honestly would be, you know, in terms of short-term flow, it makes sense. I agree with you on that end. Because if I show you the other chart that we were just looking at, you fall down 2, you run up 2. So you could definitely run up another $1 or 2 here by tomorrow, by like 10 o'clock, 9 o'clock, and then after that, we just get shut down again. So that's kind of what I'm looking at right now. So yeah, I would buy a put here. Then let's just say if it keeps running up above it, I would then get a short-term call. Hold it for a 20%, 30% gain. Make back some of the money I'm losing because of the other trade that I got into, saying that the market was going to fall down. So instantly applying insurance so that there's not really a trade that's ever going to go against you. Nor is both sides going to go against you, because when you buy that other side, it's after you confirm the market can go higher, right? So it's just confirmation. You're just waiting for things to confirm. There's a certain pattern involved with confirmation. It's easy to spot all the time, just like how I'm easily spotting it right now and today. And yeah, it was kind of cool how number 6 on the reversal points perfectly matches up with this line right here in the middle. Like, that's awesome, to say the least. So yeah, we'll see tomorrow if you run up to 623, 624. If you get above it, of course, calls, right? And then we're going to sell the calls at around 626, if not 631. If the market wants to keep running up higher, doesn't really matter. And then if it falls down, it's perfect because we already have plays that are for the long-term downside. Only for about a month out, 2 months out. And then we're going to hop back into the calls again, which means the market's going to go back up. After it falls down, if you're looking at my screen, from all the way up here to all the way to down here. Well, actually, wait, way down here. Way down here. Like right here. So the market's going to fall from up here to down here, potentially. And then you might hold and run up for like a week or two. And then you might actually fall down to the midpoint, which is 548. So the trend will look something like this, right? You fall down, hold here, probably hold up to somewhere here. Fall down to the actual midpoint, which is right over here. And now SPY is going to really break out into the 700s. It could still run into the 700s now, but with all my charts and what they're telling me, it simply just ran way too quick. The current trajectory the SPY has ran from down here to up here was the fastest in all of time and in all of history. So just going off of pure statistics, whenever a crazy trend like that occurs, it always stops. It always will end itself because its own momentum killed the possibility of it being able to hold itself for longer and go up higher. Does that make sense? If they would have bought up SPY in a more normal way, not as aggressively as they did, SPY would have took around 8 months to run up instead. Honestly, it would have took probably about 8 months. Every 3 months we would have got a nice little run up and then a drop. Like this right here was supposed to drop you from 590 all the way right back down to a new low. You were supposed to go to 460, but because of the war and all the stuff going on with the politics, and because of the simple fact of you crashing from up here to down here was because of tariffs, it was literally just because of tariffs, which is mind-boggling to me because, yeah, that makes no sense. Which, yeah, that's why the market's right back to a new high. That's why I was telling everybody, tariffs make no sense because it's going to dissipate within 3 years, 4 years. And regardless of whatever the tone was or whatever the trend was, it's not going to actually stay that low. So what we did was, again, we bought down here. Everybody who bought down here is up. If they're still holding now, about 1,000%. Just like how one of our members, BG, posted a couple days ago. He posted this picture right here. As you can see, he bought this the same time we bought our contracts at 408 for $100, and then he sold it for around 1,300, and that's a nice check. That's basically half of most rent in New York City, so that covers a lot, you know. Of course, he did buy it on the 4th, and he did sell it on the 7th. So the only thing that could have been better about this was if he bought a couple more. However, I know BG, and I know he definitely has more plays on the board. He's always holding stuff for a very long time, which is why he's always sending big trades, you know. He's always sending 1,000%, 600%. It's because the way he's looking at the market, because of his job, he can't always be here. So it actually helps him. Having a job actually helps you with trading because you need to have breaks and moments in between where you're not staring at this all day, because then you get in your own way, your own head, and you can't progress until you take a little break. Like with me, I no longer get in my way no more, so the necessity of breaks is not really needed. But for most people, it is going to be needed because they just haven't went over that hill yet. It usually takes at least a year of you doing this 16 hours, 12 hours a day, just like how I did for 4 years in a row, to be able to get to this level. That's what I would say, honestly. That's how long I've been trading for. That's how long I would trade per day. Some days, of course, I would take breaks and I wouldn't trade the whole day, obviously. I would trade like 6 hours, 4 hours, maybe an hour. But for the most part, it was around 12 to 16 hours a day. And we used to have the whole entire day be live, right? From 9 all the way to 9 at night until I started my one-on-ones. We would just be live that whole time. All of 2024. We didn't even go out for the summertime, didn't do nothing at all for 2024. Besides in the beginning of the year and then towards the end of the year. No, that was this year, actually. Yeah, we were just home, literally nonstop, fixing these charts, everybody. So do you need to put that much time into this? No, of course no, because I already did it for you. But you're going to still need to put at least a quarter of the time, maybe a year, maybe 6 months. In the process of that, though, you're definitely going to be able to profit a lot, though. You don't have to wait 6 months and then, oh, boom, now you're profitable. Throughout those 6 months, there's going to be a lot of profit on the table for you to take, hold, keep, spend on other things. And that's the best part about it. By the time you actually get to that final level where you're actually really comfortable, every single week is extremely profitable because you know when not to trade and you know when to trade. As long as you know when to do it and when not to do it, you tend to avoid all mistakes. So, like I'm telling you guys got to hold. You guys got to see when I had sent these on this day right here on the 8th. Go back to the YouTube live stream. You'll see what I was talking about. You'll see what I was saying. And then you'll see what option BG bought, what options we bought, what options everybody else bought, Danny bought, Culinary bought. And yeah, you could just go from there. Again, we did the same thing up here. So we've been buying puts pretty much at every single one of these highs. We're looking for this market to actually drop below every one of these highs and to drop below to 540. So yeah, we're still perfectly fine, honestly. As long as your options have at least another month and going almost into August, because that's when I think the low is going to happen. It's just like last year, honestly. Literally, I kid you not. Look at last year. You just kept running all the way up to July, crashed out the sky, hit the floor by August, and then ran all the way up by the end of August. So, July, right? Crashed out the sky. You hit the floor by August. So, like, probably by the 31st, probably, the 29th. And then after you hit the floor, you start running right back up to the top. And you could just run out the sky, yeah. That could happen. But remember, the floor is not just here. It's not at 580. It's all the way down here at 540. So, this is going to be wild. I don't know if it's going to happen, but I'm telling y'all, this looks crazy. If this actually occurs, these options are going to go up like 1,000%. 1,000, 2,000% within the next month. Just make sure you have time. So make sure your options are for August, September. No more July stuff. Just August, September, October. That's all you want right now. But yeah, let me know if you guys need any help on anything. I was supposed to take a little break earlier, so now I'm just going to take a big break. I got some miles to put on the board. Yo, I ripped the under half of my damn shoe. So I gotta go get a new pair soon. Those shoes are completely gone. The extra walking killed it. These options are so dirt cheap. This is insanity. Whew. $300 for this. Don't mind if I do. All right, so this is the contracts we're going to buy. 580 puts that expire August 15th. Actually, no, let's look at all the options at the end of August. Like August 29th, yeah. I like those right there. We can even go for my birthday in September. It's not a bad idea too. But I think what we want to do here is, yeah, we'll do at the end of August. We'll get one, then September, then October, then December. We'll get 4 different sets. I think that should be good enough for the downside. And again, we're going to buy as it's crashing. Of course, prices are going to be a little bit higher than where they were at the bottom, but at least now we can confirm the market's crashing, right? It's all about confirmation. Sometimes you're always going to have to lose a little something just in case. Not in terms of your money, but in terms of the money that was on the table that you could have gotten had you had bought at the top. If you have the extra capital, of course, you could throw it in now. If not, if we run up again higher. But just be very careful. You have to reasonably invest your money and average in so that even if the market runs up a crazy, second high or does something wild and exotic again, where you're now at 700, we still have enough money for you to actually make all your losses back and be very profitable, right? So that's my main intention here. Just in case if the market runs up and keeps running up, we still have enough money to move around with. Yeah, contracts 53 days out got no volume. It's the contracts 46 days out. Actually, I'm wrong. It's the contracts 39 days out that have all the volume. Yeah, all the volume for the puts is here. 39 days out. Okay, let me get the next picture ready. So that's one of the plays we're going to get. That's for August. For September, is going to be a... Okay, that's not terrible. Let's check October real quick. October contracts instead. Yeah, we would have to go lower than 480 for it to be reasonable, which is a little... I mean, it might work. The market could crash right back down to 460, 430, in which those contracts only cost 100 right now. So, but then again, I wouldn't want to get it for October. I would get it for like December if I'm getting something that far away. Like a December contract for 5 or for 460, let's say 440. 440 for December 6 is 260. So that's pretty far, I'm not gonna lie to you. We could get a 1,000 day put and just call it a day. Just 1,000 days out, 3 years out. We could just do that, honestly. We would have to get like a 340, cost around $600 right now, which is not bad. I was looking at these on Thursday, my bad. But yeah, I think they have all the volume as well, all the open interest. Yeah, all the open interest, 6,000 right here. That's also 6,000. Anybody down here? Not really. Who the hell is putting out? Someone put 1,000 options for $200 on SPY. That's insane. Okay, so we got the 1,000 day out contract, and we also have the 39 day contract ready. The only one I want to get ready next is October of this year. I guess you could play October puts for SPY to drop to a new low. I guess it's not that crazy of an idea. But then again, you wouldn't want to play for a new low because it costs too much. Let's go ahead and check Discord real quick. All right, so the last thing I want us to do here is gonna be PC issue, but you resetted it. I had to reset 90% of the PC. Nah, yeah, that's 98 degrees is crazy. I don't think it's that hot right now over here. Let me check. It's 85. Yeah, it's not that crazy. Thunderstorms. Damn, it's gonna be raining the whole entire week. This week and next week. All right, so I think I got all the options for us locked in. We got a 1,000 day out option. All right, so let me check one more chart real quick, actually. I think we still have time for these Joby puts. Yeah, we still have till August 1st. So we'll sit in these for a little bit. Let's not touch it. We might be able to buy XRP again here. Nah, it's still high. So Bitcoin's market cap is at $2 trillion right now. I'm thinking that you might just half yourself in crypto winter. You're most likely going to lose a quarter of that. Well, not really half yourself, but you might just lose a quarter of that value on Bitcoin. Because remember, what is crypto winter, right? Crypto winter basically means for the amount of Bitcoin that are currently on the blockchain in terms of a quantity, right? Because there's always a quantity to something you can invest in. There's always a certain amount of it that you can buy that's out on the market. What happens is every 4 years, it gets cut by a quarter. So when you lose a quarter of your value, you could basically say that the chain reaction of people getting margin called and losing money and getting scared and jumping out would probably be like another 40%. So you could say like not 40% in total, but like it would be probably like another 20%, another 10% on top of the initial 25%. So you can therefore say that because of a 25% deletion, you might get a 50% correction or retracement. So that would mean we're going to fall to around 54,000, 50,000, which is exactly what I stated before. It's pretty much what I'm trying to buy it at. We'll buy up all the meme coins, all the crypto in 6 months from now when you actually fall out the sky. For now, I think what our intention should be is just to scalp play this. Just in like we did before, out real quick. Next time we're going to get out at a closer high, so we don't have to deal with this right here, because we could have just bought it again and had another profit right there. It was kind of risky to let it come back down like that, because that meant it could have, you know, went down way lower beneath the red line there. So yeah, that's XRP. Everybody knows Dogecoin. This is the Dogecoin chart. This is my older one, so it kind of looks a little more crazy than normal, but actually, let me show you the better one. I think I have it around here. Oh, no, I don't. Not for Dogecoin. A bonk coin I do. So as you can see, we had these points in which you would fall down. We bought it right here last time, and then instantly you were up like $5, $10. But then we kept holding it because it was only a $20 trade, and that was the first mistake. That was our very first trade ever in a crypto play, was to trade bonk. So we bought it right there at a good point, but we just didn't sell it at the highs. We had one opportunity, 2 and 3 opportunities to sell out, and a fourth one over here. But we did not take it, just took the loss. I sold out probably right down here for 28 cents. I took my $28 back, and just waiting to reposition and make that money back. It's never over till it's over, everybody. I love how you hit these lines, though, from before. These blue ones here, from like that high right there, and then that high. And you just hit it again a bunch of times here. But yeah, let's go to the next coin. Pepe. Weird ass names. For this company, same way I chart SPY, by the way. I'm doing the same thing for the crypto. I'm not doing anything different. Okay, so for Pepe, you're pretty much just stuck right inside this quarter point right here. Once you get above this midline, we could probably see a run up a little bit higher. Right now it has a nice little wedge from the bottom, but I'm telling ya, all these cryptos are going to break this wedge. That's the one thing you have to be worried about. Okay, so let's go to XRP now. XRP. On this other chart right here, as you can see, you're way above it. On this chart, pretty much just hovering above the 200. So let's just stay on the 200 or on the 1 hour. Let's go to near USD. We had a couple members in the Discord play this earlier on. As you can see for near, just like most names, just collapse right back to the floor with no promises, taking everybody's money. That's pretty much what most of the cryptos do here. That's why it's very dangerous to trade them. It's not a good idea, honestly. It's pretty stupid. In fact, you should just always make sure you have more money inside the stock market than ever inside the crypto market. If you don't, simply just means you're here for the money and you're here for the quick dollars, huh? But it's not going to work out. Whenever you're here for the quick money, which it shows because of your investment portfolio compared to like stocks, futures, options, crypto. And yeah, just remember that. If you're doing it and you're not aware of it, now you are. Now you can make those adjustments, fix up your portfolio, sell some stuff. Don't be rushed. Don't be forced to sell it, but understand when it's a good point to sell it, is what I'm trying to say. And if you need help, of course, you can always ask me. For near USD, again, you're just at the bottom. It looks like you might be curving upwards here, We could see this retrace to the upside, but again, it's still a little risky because of how much you guys sold off already. It's just like you already lost like 90% of your value. Look at this. You're at $8, almost $9, and then look now, $2. So that's terrible. On Trump's coin, it's even worse. Trump's coin is pretty much all the way at the bottom, which I'm thinking of something. You all picking up what I'm putting down? Think about it. You don't think people are going to be loading up in this? Because it went all the way up to practically $79. If it runs up again, you know what that means, right? That's up 1,000%. So I think there's going to be a lot of people buying into this, honestly. I would even start buying this now. If I have like an extra $100 laying around, I'm telling you guys, you could just buy into this. If you're looking at where you had to buy, I have no idea, honestly. You're going to have to check Coinbase or another crypto platform, maybe Webull. But yeah, just look around, watch a YouTube video as to how you could buy the Trump coin. This really does look like a good idea. There's not much lower you could go, honestly. But of course, make sure you don't put a crazy amount. Don't put like 1,000 into this yet. Only put like 100 every like 2 weeks. Every 3 weeks, you could put $100 into this. It's not a bad idea. Every 4 weeks, even. That's proper. Because you have about 6 months before the crypto winter is going to be done after it starts. So maybe you have 8 months from here to then. So with 8 months of time, you definitely have more than enough time to actually put in around $1,000 into this, but over the course of a couple months. Just so you can keep buying it if it keeps falling lower and lower and lower, and your average is not going to just be down 90% when it falls down to like $3, right? All right, going to the next crypto name real quick. Ethereum, I got to fix my charts. I also got to fix it here as well. Bitcoin, we're pretty much just waiting for it to hit this damn red circle. And then once it hits the red circle, it needs to hit this white circle next. And then after that, we're falling out the sky. That's the plan right now. You actually ran up crazy. Let me see something real quick. Check Coinbase. Yeah, it literally is just copying Bitcoin's trend here. How about MSTR? Yeah, same thing. So we should be able to see Coinbase run up to 390 maybe. And then we could just short 6 months out, 10 months out. What are you doing? She's so bored that she's trying to like climb into random places she's never been before. Just go in the corner. Go play with her. Yo, this cat's mad weird. We got the contract 53 days out. We talked about that. We can get another contract maybe 18 days out. That would be a fun little play right there. Okay. So that's 14 days out for SPY.
18 days out. You have a good amount of open interest for 18 days out. That must be when they think it's gonna start crashing.
I just had an idea. I had a really good idea. All right, so I'm gonna do that. We'll get that done. We'll get that rolling. Um, yeah, that gap on Tesla's crazy. $30 gap. That's nuts. What? $20 gap. Sorry. Might trade Tesla a little bit more aggressively.